Hey guys, what's going on? David over here at InvestQ, and I do got a pretty interesting video about Rezolve AI. And the video is talking about something that one of my subscribers wanted to see. Shout out to you, Chris. He just wanted me to do a little bit of research on the CEO and make a video about it. And after doing some research, I do realize that the story is a little bit bigger than I expected, and there's a bigger picture to the story. Now, before we begin, I want to make something very clear that nothing in this video should be interpreted as me accusing Dan Wagner, Rezolve AI, or anyone of any wrongdoing. This video is not intended to make factual allegations beyond what has already been publicly reported. Everything discussed today comes from publicly available information, including media reports, administrative reports, SEC filings, company statements, and short seller reports where the allegations were already discussed. I will clearly identify them as allegations per the public reports and where Rezolve AI or Dan Wagner have also publicly responded. I will include those responses as well, and my goal is to not convince you to buy the stock, it's not to convince you to sell the stock, or tell you who's right or wrong. My goal, as always, is to simply present the publicly available information and present both sides of the story from those articles, and also be able to allow you to make your own informed conclusions. And as always, this video is for educational and informational purposes only, and nothing here should be considered financial or legal advice. So with all that out of the way, let's start at the very beginning, because to understand exactly why it is investors continue debating Dan Wagner today, we first have to understand what exactly happened to Powa Technologies. Probably mispronounced the company, so apologies on that. But Powa Technologies, and I'll put all the links to the articles that I have in the video here so that you can do your own research. But back in the early 2010s, Powa Technologies was one of Europe's, from the research I found, it was one of Europe's hottest technology startups, and it was founded by Dan Wagner, and the company, it focused on mobile commerce and its flagship product. Now, and the flagship product was called Powa Tag, Powa Tag, and it was designed to allow consumers to instantly purchase products simply by scanning advertisements, magazines, television commercials, or other media using their smartphones. And at the time, the concept sounded incredibly ambitious. Instead of typing website addresses, searching online, or manually checking out, Powa wanted to make shopping almost instantaneous. It wanted to be able to scan something and then immediately buy it. And if that sounded familiar, that's because many investors have pointed out similarities between Powa's original vision and what Rezolve AI is trying to accomplish today. And we'll get back to that a little bit later. But according to Business Insider, Powa eventually reached a reported valuation of approximately $2.7 billion. $2.7 billion right there. And the company raised or had access to well over $200 million from investors. And for a period of time, Powa wasn't viewed as some obscure startup. It was viewed as one of the UK's biggest technology success stories. And on paper, everything looked incredible. There was massive valuation, there were large investors, there was international expansion. They had many big announcements come out for the company, and there was growing excitement surrounding the business. But behind the scenes, things weren't as simple as they appeared. Now, as I continued reading through various reports, one thing became very clear. Many of the concerns that investors discussed today didn't suddenly appear after Powa collapsed. Some of the questions that investors were asking were already beginning to surface while the company was still growing. And, one of those concerns centered around spending. Business Insider reported that Powa expanded aggressively. They were opening offices around the world while hiring rapidly. You can see here as you scroll down, there's going to be a few portions of it where, hold on, I think I got to click read more, 1 second. It's not showing everything, 1 second. There we go. Well, yeah, it shows it right here, but I don't know exactly why it is It's not letting me see the rest of the article. I just want to make sure. Yeah, it's only showing the bottom of it. Let me make sure. There we go. Yeah. So offices all around the world right here. Sorry, I was on the wrong article. But both of these are from both of the articles that I'm going to be putting are from Business Insider. But as I was saying, they expanded aggressively, opening offices around the world while hiring rapidly. And according to reporting that referenced Deloitte's administrator report, the company's payroll eventually reached roughly 2 million euros per month. And critics argued that the company was spending like a mature global business, despite still being in the early stages of commercialization. And Business Insider also described expensive office space, including offices in London Heron's office, in London's Heron Tower, along with international expansion into multiple countries. And naturally, after the company later collapsed, many people pointed back to that spending, arguing that the business expanded far faster than it should have. But this is where it's important to include Dan Wagner's side of the story. Wagner defended those decisions, and he argued that presentation mattered when trying to secure major enterprise customers. And according to Wagner, having impressive offices helped convince potential clients that Powa was a serious business capable of handling large commercial relationships. And he also stated that Powa negotiated an extremely favorable lease arrangement, including approximately 2 years of free rent, and claimed that the company ultimately paid rent before it entered administration. So even early in the story, you already begin seeing two very different narratives, because one side viewed the spending as reckless and the other viewed it as strategic investment in building credibility with enterprise customers. Now, let's talk about what Powa was actually trying to build to begin with. And Powa, they were trying to build something called the Powa tag. Powa tag was designed to allow consumers to purchase products directly from virtually any form of media. That includes television commercials. It also includes magazine advertisements, billboards, printed catalogs, product packaging, and even audio. Now, the goal was to eliminate friction between seeing a product and buying it. And instead of remembering a website or searching online later, you could theoretically purchase immediately. And looking back, it's actually a very ambitious concept. And interestingly enough, many aspects of that vision sound surprisingly similar to concepts that have become much more common today, especially as AI, visual recognition, and mobile commerce continue evolving, that does raise an important question. And that question would be, was Powa simply ahead of its time, or were there deeper problems inside the business? And that's exactly what we'll begin exploring, and that's what I want to explore in this video, because this is where the story starts becoming significantly more controversial. And I want to dive a little bit deeper into the allegations surrounding partnerships, letter of intent, former employee claims, administrative findings, and Dan Wagner's responses to each of those criticisms. Now, talking about all this, we've talked about what Powa Technology was trying to build. We did talk about the vision, and we've talked about the enormous valuation. But everything started to change in February of 2016, because Powa Technologies entered administration, and the company reportedly burned through more than $200 million, and what was once valued at around $2.7 billion, all of that collapsed. And naturally, whenever something like that happens, people begin asking questions. They ask, was this simply a startup that failed, or did something else go wrong that people were unaware of? And that's where the reports surrounding Dan Wagner began. So, first off, let's talk about the letter of intent. Wagner, letter of intent. Let's see. So let's talk about the letter of intent right here. So speaking of the letters of intent, if you're unfamiliar with the term, a letter of intent, or an LOI for short, is generally not the same thing as a finalized commercial contract. What it can represent is an intention to work together, but depending on its terms, it may not legally obligate both parties in the same way that a compelled commercial agreement does. And according to Business Insider and later Deloitte's administration report, Powa had publicly discussed having nearly 1,200 customers. However, the administrator's report stated that only 100 companies had signed formal contracts, and many of the remaining agreements, according to the report, were non-binding letters of intent, and that became one of the biggest criticisms surrounding the company. Now, critics argued that investors may have interpreted these announcements as fully secured commercial relationships, when in reality, many were still preliminary. And Dan Wagner strongly disagreed with that specific characterization. According to Wagner, the characterizations around the letters of intent, Wagner, he said that those letters of intent weren't meaningless. He argued that they committed merchants to using Powa tag under published pricing and terms. And he also compared them to users accepting Apple App Store's terms and conditions. And he also argued that many of the companies that later signed formal contracts simply wanted additional legal documentation before moving forward. So once again, you have two competing narratives. On one side, argued investors were being shown an inflated picture of customer adoption, and the other argued that those agreements represented legitimate commercial commitments. Now, another issue that attracted significant attention is the fact that Powa, it was regarding Powa's expansion to China. And right here, so you just scroll up a little bit, you're going to see the deal in China. And shortly before the company's collapse, Powa announced a major joint venture that Dan Wagner described as an enormous opportunity. And according to the reports, the company believed that the agreement could potentially generate billions of dollars in future revenue. However, the Financial Times questioned how significant that opportunity actually was. And Business Insider later reported that documentation showed a real agreement existed. But there were still legitimate questions surrounding whether Powa could realistically compete in China's highly competitive payment market. And that's especially against companies like Alipay and Tencent. And Dan Wagner, however, continued defending the agreement. He maintained that the China opportunity was genuine and believed it could have dramatically changed Powa's future had the company survived. And again, there wasn't universal agreement. There were differing interpretations of the same event. And there's a few other things regarding the Business Insider report. They didn't just focus on the financial issues. It also included interviews with numerous former employees who described concerns regarding company culture. And among the allegations, former employees criticized extravagant spending, including expensive Christmas parties. So extravagant Christmas parties. And that also was regarding high-end office space and what they believed was excessive spending for a company that had not yet become officially sustainable. And one story that received considerable attention involved a company Christmas party featuring topless dancers. Business Insider reported that the event offended many employees and that Dan Wagner later apologized internally after learning how some staff felt. And Wagner later explained that the company parties had always been part of his management philosophy, arguing they were significantly less expensive than paying large bonuses, and that the particular event in question simply went too far, and he stated that he apologized as soon as he became aware of what happened. Now, there's also one more allegation regarding the culture of the business, and that's regarding the types of people that he has in management. Specifically, this portion of the article titled Yes Men. because another criticism that was raised by several former employees involved the style of their management, because some former executives alleged that Dan Wagner surrounded himself with people unwilling to challenge his decisions. And one former executive interviewed by Business Insider described an environment where criticism was not always welcome, and they were arguing that the important concerns sometimes weren't being raised. And Dan Wagner rejected those allegations, and he stated that his leadership team met regularly and that there was healthy debate inside the company, and that Powa maintained an active board capable of challenging management whenever necessary. And according to Wagner, the idea that he surrounded himself with yes men was simply, in his words, nonsense. Now, another major debate surrounding Powa Technology itself is some former employees interviewed by Business Insider claimed that the flagship product, Powa struggled with technical problems, and one insider reportedly described it as a basket case. And those comments naturally fueled criticism after the company's collapse. However, Dan Wagner completely rejected those claims. He argued that Powa absolutely had a working product, and he pointed to announced agreements involving companies such as Auto Group, along with El Orial. Forgive me if I mispronounce that. It's spelled Loreal. And he was arguing that large multinational corporations simply wouldn't move forward if the technology didn't actually exist. And his position was pretty straightforward. According to Wagner, the idea that Powa never had a real product was, again, in his words, ridiculous. So, the question is, what actually caused the collapse? And after reading all these reports, the obvious question becomes, what actually caused Powa to fail? Because according to Deloitte's administrative report, the immediate answer was pretty simple. The company ran out of money, despite reportedly raising nearly $200 million, and the report stated that Powa had only around 755,000 pounds remaining in the bank near the end of 2015. And while still being described as essentially pre-revenue, that's an incredibly difficult position for any startup to recover from. Dan Wagner, however, maintains the story is more complicated than that, and he has repeatedly argued that there were additional factors behind Powa's collapse. Although he has declined to publicly discuss many of those details, citing legal advice, he has also previously argued that financing decisions may be creditors contributed significantly to the company's downfall. Now, everything we've discussed so far has focused almost entirely around Powa Technologies. But here's where the story takes another interesting turn, because after Powa collapsed, Dan Wagner didn't disappear, but instead he launched another company, Rezolve, as we do know right here, ticker symbol RZLV. And that's where many investors today begin asking an important question, and that is Rezolve simply another startup founded by an entrepreneur who learned from past mistakes, or are there genuine similarities between Rezolve and Powa that investors should understand? Now, after Powa Technology collapsed, Dan Wagner largely disappeared from the public spotlight for a period of time, because naturally many people assumed that would be the end of the story. But it wasn't. Instead, Dan Wagner eventually returned, and this time it's with a new company called ticker symbol RZLV, otherwise known as Rezolve. And this is where today's controversy really begins, because many investors have asked one very simple question, and that would be, is Rezolve simply another company founded by an entrepreneur who learned from his previous mistakes? Or is it essentially the same thing that we're going to see from Powa? But is it just going to be under a different name? Is it the same story, different company, different name? So Business Insider was one of the first publications to point out the similarities. And in one article, they described Dan Wagner as attempting to rebuild his reputation through a new e-commerce venture that happened, or that appeared. And at least conceptually, it seemed similar to Powa, and Business Insider noted that Rezolve focused on helping consumers instantly purchase products directly from media. And whether that involved advertisements, television, magazines, or other forms of content, if that sounded familiar, that's because it sounded very familiar to Powa Tag's original vision. And when looking at the diagrams, it can be kind of easy to understand why people begin making comparisons, because both companies centered around removing friction from online shopping. And the goal in both cases was to allow consumers to instantly purchase products after interacting with digital or physical media. And Business Insider specifically highlighted these similarities. However, similar business models alone don't necessarily mean two companies are identical. Many successful companies build upon earlier ideas, so simply sharing similarities isn't enough by itself to draw conclusions. And Dan Wagner himself rejected the idea that Rezolve was simply Powa 2.0. He rejected that idea entirely, and he stated that, in his words, there's no overlap between the two companies. He argued Rezolve had been built from entirely new technology and that he had absolutely no need to rely on Powa's intellectual property. And he also did state that I have, and I put this in quotations, that I have created something entirely new with Rezolve. And he was adding that he wouldn't dream of using intellectual property that didn't belong to him. And in other words, his position was very clear. Rezolve, according to Wagner, is not Powa. Now, there was another point that attracted attention, is that even though Dan Wagner insisted that the technology itself was entirely different, he openly acknowledged that several people who had previously worked with him joined him again at Rezolve. And during one public presentation, he explained that some members of his previous teams, including people who had worked with him at earlier companies, were helping build Rezolve. Now, that's not necessarily unusual by itself, and successful entrepreneurs frequently bring trusted employees from one venture to another. But critics argued this further strengthened the similarities between Powa and Rezolve. Supporters, on the other hand, argued it simply demonstrated Wagner preferred working with experienced people he already knew. And again, it's another example where investors may reach different conclusions using the exact same information. And for several years, Rezolve remained relatively under the radar, but then everything changed. Because in 2025, let me pull this up for you, RZLV short seller report. So yeah, right. Let me make sure I got the right. Yeah, right here. So everything changed in 2025 because multiple activist short sellers, including Fuzzy Panda Research and Grizzly Research, published extensive reports criticizing the company. And unlike Business Insider articles, which primarily focused on Powa's history, these reports directly argued that many of the same issues were occurring again. And before we discuss those reports, it's important to understand something. A short seller has a financial incentive for a company's stock price to decline. And if the stock falls, they potentially profit. So that doesn't automatically mean that the research is wrong, but it also doesn't automatically make it correct as well. It's simply important that the investors have the context, and they should always keep that in mind. Now, the central argument made by Fuzzy Panda Research was that Dan Wagner previously had led a failed company. And their argument went much further. Again, this article is very long. Again, I'm going to have the link for you, so please do your own due diligence. And these people really made a very thorough article. At the end of the day, these guys did do their research, and you can feel free to do your own research as well. And they claimed that Rezolve was repeating many of the same patterns they believed existed during Powa. And among the allegations, the report questioned the company's artificial intelligence capabilities and its reported recurring revenue growth, its acquisitions, its partnerships, and they're also going over the credibility of management. And the report also repeatedly compared Rezolve to Powa, arguing that history was repeating itself again, and those are allegations made by a short seller. They are not findings from a court, nor should they automatically be accepted as fact. So if after this video, and again, it's a pretty long video, I got another long video for you, you might be wondering if these are simply allegations, why do investors pay so much attention? And the answer is actually pretty straightforward. Short seller reports have historically uncovered legitimate problems at certain companies. At the same time, there also have been situations where short sellers' reports were inaccurate, misleading, or ultimately proven wrong. That's why I don't think investors should automatically believe or automatically dismiss either side, but instead they should read the report, read management's response, which they did respond to, by the way. In this article right here, it shows that Rezolve AI rejects Fuzzy Panda's misleading report. So again, check both sides of the story, and then verify as much information as you possibly can, and then make your own decision. Quick reminder before we continue, if you're enjoying the content and want to connect with the community, check out the first link below for the free InvestQ community. And if you want access to advanced stock research and tools, the second link is a Prophecy 7-day trial for just $7. And last, if you want daily market updates and behind the scenes content, follow me on Instagram using the third link in the description. Now, let's get back to the video. So now, in this part of the video, what I want to do is talk about what would the proper thing to be talking about in this video is, I would say it would be to go a little bit deeper into the short seller allegations and just cover a little bit about what Fuzzy Panda actually claimed and talk a little bit about the response from Dan Wagner and management in this article right here. So we've reached, in this video, we're probably at the most controversial part of the entire story, because everything we've discussed so far regarding Powa Technologies, Business Insider, the Deloitte Administrators Report, those were all looking back at history. But in 2025, again, when the article came out from Fuzzy Panda Research, and it was directly onto Rezolve AI itself, because again, this was comparing and talking a lot about Powa, along with this one as well, and talking about management, the culture of management, and the things that he did, and how all the allegations that were reported here in Business Insider. Is talking a little bit more about the past, but Fuzzy Panda is talking more about the present with Rezolve AI. And again, multiple activist short sellers published lengthy reports criticizing the company, and the two most widely discussed reports came from Fuzzy Panda Research and later Grizzly Research. Now, again, before discussing further with any of these allegations, I want to remind everyone of something I mentioned at the beginning of the video, that these allegations are made by short sellers, and short sellers profit financially if a company's stock declines. Again, doesn't automatically mean if one is right or wrong, but this report represents one side of the story. So, one of the report's biggest criticisms involving Rezolve AI is Fuzzy Panda questioned whether Rezolve AI technology was truly proprietary, or whether it relied primarily on existing large language models developed by other companies. And the report, it did argue that many of Rezolve AI's capabilities resembled functionality already available through publicly accessible AI models. And they were raising questions about how differentiated the company's technology really was. Now, that's obviously a very serious allegation, because if a company is marketing itself as an AI leader, investors naturally want to know exactly what technology the company owns and what technology is licensed or built upon existing platforms. And again, that was the position of the report. And the next topic involved partnerships, because Rezolve has publicly announced relationships with companies such as Microsoft and Google. And those announcements understandably generated excitement among investors. And I did cover that in a previous video with Rezolve as well, after doing a little bit of research. However, Fuzzy Panda argued that some investors may misunderstand what those relationships actually represent because, according to the report, many of those agreements appeared to be commercial service relationships or cloud infrastructure agreements rather than exclusive strategic partnerships. Now, that is an important distinction to make because using Microsoft's cloud services or using Google's infrastructure is not necessarily the same thing as Microsoft or Google endorsing your business. It doesn't mean that they're investing in your company also or becoming a major commercial customer. Again, that's the interpretation from the report presented by the short seller report. And the report, it also did focus heavily on Rezolve's acquisition strategy. Specifically, it discussed acquisitions involving companies such as Visenze, it's spelled Visenze, Group Buy, and Blue Dot. And according to Fuzzy Panda, these acquisitions may have helped increase reported annual recurring revenue, or ARR, without necessarily reflecting strong organic growth inside Rezolve itself. And the report also argued that some acquired businesses had experienced financial difficulties before being purchased. So in other words, their argument was not simply that the acquisitions occurred. Their argument was that investors should carefully evaluate how those acquisitions affected reported financial metrics. And again, that's the allegation made in the report. And another area receiving considerable attention, related party transactions, because the report alleged that one acquisition, specifically Blue Dot, had prior ownership connections involving Dan Wagner. And the report questioned whether shareholders received appropriate value and whether investors fully understood those relationships. And related party transactions aren't automatically improper. And many public companies disclose related party transactions every year. And the important issue is whether they're properly disclosed, appropriately valued, and in the best interest of shareholders. And that's ultimately something that investors need to evaluate using public findings rather than relying solely on headlines. And another criticism involved annual recurring revenue, commonly referred to as ARR. And the report questioned whether Rezolve's reported ARR accurately reflected sustainable recurring customer revenue, or whether acquisitions and accounting treatment created a more favorable picture than investors realized. And this became one of the report's central themes. And if a company's valuation depends heavily on recurring revenue, then understanding exactly how that recurring revenue is generated becomes extremely important. And again, the report challenged management's presentation. It did not establish wrongdoing. And finally, what I want to cover is the report repeatedly returned to Dan Wagner himself, the CEO. And Fuzzy Panda argued that investors should consider Powa's history when evaluating Rezolve. They suggested there were similarities between the two companies, including ambitious announcements, large commercial claims, and aggressive growth strategies. Supporters of Rezolve obviously disagree with that characterization, but this ultimately became one of the report's broader themes, not simply questioning the business, but questioning management's credibility based on historical events. And after reading the report, I do think that it's important to separate emotion from facts, and these reports contain serious allegations. Some may ultimately prove accurate, while others may not. And history has shown examples of activist short sellers uncovering legitimate corporate problems, and history has also shown examples where activist reports contained errors, misinterpretations, or conclusions that investors later rejected. And that's exactly why I don't think anyone should blindly believe either side. And the report is one piece of the information, just one piece of the information, not the entire investment thesis. So, in closing, my opinion is, after doing some research, I do think that there's valid concern. And again, this is just my personal opinion, not financial advice. But I'm not when I mean by what I say that I'm not necessarily too worried, the reason I say that is because Rezolve is not in my personal watch list. I'm not personally going to buy Rezolve. I have other things that I'm looking to trade and invest in. So I do think that this is fair concerns, and again, shout out to you, Chris. Shout out to you, Chris, for bringing that up, because I was completely unaware of the history of Dan Wagner prior to you making that comment and me doing my own research. But one thing that I do believe is important to do is not necessarily just looking at the underlying business and what they do day to day. I think it's also important to see who's running the ship and to see how credible they are and to see how reliable they are and to see if they are transparent and trustworthy types of people that if you were a part of the business, would you enjoy or do you believe that management is doing what is best for the company, not as just what is necessarily best for themselves? And if you ask those questions and the answer to the question is yes, that's just another green flag. It's still not the entire investment thesis. It's still not the entire long-term thesis for any company that I invest in. But trust is very important and transparency is very important. And if you feel that all of the reports that came from Fuzzy Panda and the short seller reports that we discussed today raise red flags for you, maybe you should reconsider whether you are a holder of the company, whether you want to sell, you buy, you make your own decision. But me personally, I'm not going to be buying Rezolve anytime soon. I got other things on my watch list. So I'm not too worried, but hopefully that did cover some of the concerns that Chris was mentioning that he wanted me to talk about in the video. So let me know what it is you think about Rezolve. Let me know if you're a holder, if you buy, or if you're looking to sell the company. Just let me know in the comment section below. Let me know what you thought about the video, and let me know what you want to see in future upcoming videos. But with that being said, guys, David over here at InvestQ out. Stay safe, and I'll see you on the next video.